So we're going to start the year with one of the biggest narratives of 2024, whether it gets approved or denied. We're talking about the Bitcoin spot ETF, and this week, 14 asset managers are set to meet with the SEC to finalize all of the paperwork so that way we get these by the January 10th deadline. This news is pretty important, especially if you're holding Bitcoin or crypto in general, so let's just jump right into it. According to a Reuters report, the SEC can notify 14 asset managers vying for approval of their spot Bitcoin applications as early as Tuesday or Wednesday of this week. This article was written on the 28th, so just updated it for you. This would allow those asset managers to launch their ETFs by January 10th deadline for the SEC's decision on the ARK investment and 21 shares spot Bitcoin ETF proposals. The report cites sources familiar with the process, stating that several firms, including ARK Invest, 21 Shares, Valkyrie, Bitwise, Wisdom Tree, Franklin Templeton, BlackRock, VanEck, and Invesco, could be among the first to launch. Bitwise recently made the news for their 200 million seeding for their Bitcoin ETF product. This simply means that they've already set aside 200 million for day one, launch day. They're already assuming that, yeah, the SEC is going to give us the go ahead here. So that's going to be very important, especially when we talk about what kind of redemption model it's going to be, which is the kind of last stage in the process here. And you'll notice here, thanks to Marty Party on X, hell of a name, but we have a chart of the applicants that will be talked to this week, as well as their custodians, authorized parties, so forth and so on. And what you'll see right away, JP Morgan is on this list. And that's funny because it's been causing a bit of controversy in the space. Jamie Dimon has been verbally against Bitcoin, crypto, for many years. Yet, just like Warren Buffett, he has an entire arm of his they have an entire coin, all right, building out blockchain networks, DOTs. They've been doing it for years. So people had something to say about that. People felt a certain way. But outside of that, guys, you have BNY Mellon, State Street. These companies have been working with blockchain and DOT companies for years. We've ran across many of their applications in our research over the last few years. And Coinbase being a main custodian here, I don't often talk about crypto-related stocks, but this could be an opportunity for Coin if they're going to be the center, the focal point of these institutional products here in the United States. That would explain why BlackRock put all that money behind them in 2021. But like I mentioned earlier, though, the redemption models are what's most important here, which is what I think those meetings are going to be about. Again, the discussion is in-kind models versus cash create. And thanks to a report that Crypto Potato published a couple days ago, we're actually going to learn a little bit more about that. Since last month, BlackRock and other applicants have held multiple meetings with the SEC concerning their redemption model, the process by which ETF shares will be kept in tandem with the value of the fund's underlying BTC. Sponsors like BlackRock have pushed for an in-kind redemption model by which a registered intermediary transfers Bitcoin to the ETF issuer whenever it must issue new fund shares to meet market demand. By contrast, the SEC seeks to create a cash create model, which would require intermediaries to send an ETF issuer cash, which is then used to buy the BTC they need. The added step prevents intermediary broker-dealers from needing to personally handle real BTC. So the in-kind model is the one that will use actual Bitcoin to purchase the shares of the ETF, as opposed to the cash create, which only allows you to use cash. Obviously, names like the IRS, the SEC, CFTC, they want to see that cash, right? It makes it easier for them to do the reporting, taxes, so forth and so on, because they still haven't figured out how to do the tax reporting for these crypto assets yet. And Bitcoin is definitely one of them. So I can understand that. However, if you spin the globe a little bit, there's actually a process going on right now in Hong Kong for the approval of both redemption models. The SEC out in Hong Kong has been working with members of their government and businesses over there to get a final decision on in-kind or cash create models, and they're offering both. So it was in this story that I actually learned about why we need an in-kind as opposed to a cash create. In-kind ETFs could influence Bitcoin's availability on exchanges. With the ability to redeem ETF shares for actual Bitcoin, there is likely to be a decrease in Bitcoin available on exchanges. This, coupled with the Bitcoin halving, where Bitcoin creation rate is halved approximately every 4 years, will significantly affect Bitcoin's supply and demand. Bitcoin's fixed supply, capped at 21 million, plays a crucial role in its market value. As availability of new Bitcoins decreases, especially with events like the halving, the scarcity can drive up the price if demand remains constant or increases. This scarcity, intensified by options like in-kind NFTs, reducing Bitcoin availability on exchanges, highlight the importance of supply and demand in Bitcoin's pricing dynamics. Again, it's the in-kind model that favors the Bitcoin price because it has an effect on the supply and the demand. The cash create model would favor the institutions. It allows them to report it in cash. The IRS, all of the alphabet organizations can keep their fingers involved. That's the real issue here, in my opinion. But there's another element to this. Again, we're thinking about the effects of demand on Bitcoin. BRC20's ordinal protocol is now here. Like I said in my Elite 8 video, we're not dealing with the same Bitcoin. So those ordinals allow for utility, aka demand, to come to Bitcoin in new forms. They're already breaking records with NFT sales. I think it was 800 million roughly in December for BRC20 NFT sales. That's pretty impressive, guys. That's pretty impressive. So that is going to add to the demand of Bitcoin in 2024. If these ETFs get approved, that's going to add to the demand of Bitcoin in 2024. And the halving is going to do it automatically, right? Because the rewards are getting reduced. So that's going to increase the incentives for miners, which we already broke down in the Elite 8 video. That's going to increase the production costs of Bitcoin. This is really setting up to be the hottest year on record for crypto. And I can't wait. I really can't wait, guys. Now, there's yet again another element to the story, but it involves exchange traded products, not spot Bitcoin ETFs, but there is a long list of other institutional investment channels like ETPs, ETFs that are not spot based, but these products haven't been getting a lot of attention. However, with the spot Bitcoin ETF, there's a chance that could change dramatically. And there are, like I said, there are so many that are outside of Bitcoin. There are in smaller markets, some I've seen related to Ethereum, Solana, Stellar, XRP. They exist, guys. They're just in much smaller markets. The approval of this spot ETF could galvanize all of them. It could give all of them recognition. So now it's going to create a new industry. It's going to create a new market within a market. That's why I love crypto. And in looking into that, guys, I stumbled upon a gentleman. His name is Nick Carter, founding member for Castle Island Ventures, a VC fund here in the space. Yeah, they're a VC, but they've invested in Bitwise, Maple Finance, River Financial, MoonPay. These were names that I'm familiar with in my research. His perspective is very interesting because he actually thinks we've already gotten the price action for the approval. Take a listen.
And the market at this point thoroughly expects the ETF. And I think the big rally we've seen from kind of the 20s, low 30s into the sort of mid 40s. For Bitcoin, I think that's almost entirely ETF based. And so, on day of, it might be a bit of a pop, but I think the effect might be muted. Where I expect to see the price developing in the medium term, that's where I'm excited. That's when I think you see RIAs and other kind of financial entities that previously weren't able to necessarily recommend Bitcoin to their clients get the ability to do that with the ETFs. I think we'll see a marketing rampage from the big ETF sponsors, some of the largest financial institutions in the world. And that's when I think this thing really takes off as we enter and throughout 2024.
he already believes the action has been priced in. And once we get the approval on paper, once the products hit the market, we're only going to get a slight nudge. I tend to agree with that. I'm more of a slow-mo investor. I like to let things unfold and play out. That's why I only make a list of assets to watch once a year. But it also, again, will fit right into the schedule with the halving coming up, because if we get that approval and then there's a slight correction, that's going to be healthy. Let me show you this last chart here, guys. This is courtesy of Neste XPT on X. He posted a chart of gold's price action leading up to its ETF and then afterwards. And he has one here for Bitcoin, its price action leading up to its potential ETF approval, right? You'll notice that gold dumped on its ETF launch. All right. Dumped for about 60 days. Then that was followed by sideways movement, or what they call in the business accumulation. But then it took off and never looked back in September and October of 2000 and what's that? 5, it looks like. Yeah. In October of 2005. And again, there's that October month again, something that we've pointed out in our portfolio videos. But if you look at the Bitcoin price chart, similar anticipation leading up into the ETF. And if it follows the same pattern as gold and we get that retracement, again, that's healthy right before the halving. And it shouldn't be too crazy. 10, 15% for Bitcoin. That's smooth because we just moved 55 over the last 6 months, or last 4 months, actually. So again, a healthy correction. And then that opens the door for that post-halving rally. And something else to consider, if we do get it before the halving, I think it's going to be the last buy window for 2024, honestly, with the exception of the walk away in May that just always happens. We'll have another little correction in May, but 5 to 10% for Bitcoin is 15, 20, 25 in a lot of these alts. So the rallies that we've been seeing recently, everybody's been looking for a window to get back in. If this plays out according to the scheduling, yeah, we're going to have one more window in Q1 of this year. But after that, ladies and gentlemen, we're off to the races. So that's the news. Let me know what you think down in the comments. Also, don't forget to check out our new Power 42 Digit Hustle Index. This is a list of the assets that I'm going to be covering on the channel this year. Make sure you click the link in the description, see if your asset made that list. Also, guys, check out the Uphold exchange. They just opened up instant withdrawals. This is allowing your crypto that you have on exchanges or in a trade to stay liquid. So if you make a little profit, you can now get that thing instantly. I've been making use of it. It's been pretty fun. With that, you know what I'm finna tell you. Have a great day. Have a prosperous day. Happy New Year. And if the money is digital, so is the hustle.